Greetings and salutations. Thank you for lending an ear to the voice of the times. This Monday, November 29, 2021. For today's editorial, Ratify RCEP by year-end to avoid opportunity loss. Lawmakers should ratify the Regional Comprehensive Economic Partnership or RCEP agreement soon, so that the Philippines can avoid missing out on opportunities. The longer the delay, the larger the lost opportunities. The head of the Department of Trade and Industry, Secretary Ramon Lopez, told the Manila Times during a recent business forum. Mr. Lopez made a similar appeal earlier this month, saying then that the economy could see a 2.2% bump if the Philippines was ready when RCEP comes into force in January 2022. At the recent business forum, the secretary warned that long delays may mean other signatory countries would enjoy a first-mover advantage that could leave the Philippines further behind the race to attract trade and investments. Some analysts downplay the economic benefits of RCEP as modest, adding that its potential might not be realized for years to come. But we share Mr. Lopez's sense of urgency. The COVID-19 pandemic has cost the Philippine economy 41.4 trillion pesos in the long run. And even with a rosy economic forecast for 2021, the growth rate needs to be more robust, just to make up for lost ground faster. The government signed RCEP back in September 2021, and the Senate began its hearings on it only in early November. Now that 6 ASEAN, or Association of Southeast Asian Nations, and 4 other partner states, China, Japan, Australia, and New Zealand have ratified RCEP, the treaty is poised to begin in January. ASEAN, of course, is a regional bloc of 10 countries that includes the Philippines. On its own, ASEAN has a respectable market size with a combined population of more than 661 million people and market size of $2.3 trillion. RCEP will be larger, covering a third of the global population, or 2.2 billion people, as well as 30% of the world's economic output, valued at $26.2 trillion. The free trade area to be created will be bigger than any trading bloc in the world, including the European Union. Besides the Philippines, the other signatories that have not yet ratified RCEP are Malaysia, Indonesia, Myanmar, South Korea, and Australia. There are 15 signatory countries in total. Keeping pace. Regrettably, falling behind is not a novel situation for the Philippines. The government hopes to grow the gross domestic product, or GDP, between 6% and 7% next year, but others like the Asian Development Bank, or ADB, predict a more modest GDP growth of 5.3% for next year. By comparison, ADB forecasts a 7.1% GDP growth in 2022 for ASEAN. Over the years, the Philippines has seen a relatively lower share of the trade and investments pouring into ASEAN. Unsurprisingly, the lion's share of the wealth generated has been going to Singapore, despite its size. While we agree that the Philippines cannot be compared to a city-state, Singapore's success can be instructive. Besides, the Philippines also lags in several economic metrics behind other ASEAN states, including Thailand, Malaysia, and in recent years, Vietnam. In fairness to the government, it should be commended for its current infrastructure development program, better known as Build, 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 and for its legislative agenda, including tax reforms and reducing red tape. Also, policymakers have a sound strategy for the post-pandemic economy. Moving forward, the National Economic Development Authority wants to focus on smart infrastructure, innovation, regional equity, and mitigating the impact of climate change. And for its part, the Department of Education has started its pivot to focus on quality that contributes to human capital development. Of course, much more needs to be done in crafting and executing policies, but the 2022 elections may provide some unwanted distractions. There are also the continuing risks from COVID-19, with new variants threatening to disrupt the economic recovery now underway. That is why the Philippines should pounce on every opportunity, including the ratification of RCEP. The pace at which political leaders work has either economic payoffs or consequences. Failure to act swiftly and decisively, as Secretary Lopez suggested, could delay economic progress. Even with recovery underway, people are unlikely to have patience for politics as usual. And that's editorial for Monday, November 29, 2021. For more news and information, get a copy of the Manila Times on print, subscribe to our digital edition, or log on to www.manilatimes.net. Follow us on Twitter, Facebook, and Instagram, and listen to The Voice of the Times.